Great. So we are just doing some Q&A, but while doing the Q&A, I wanted to highlight a few concepts. So one is this daily super trend concept. You can the standard is 10-3. So let's go back to super trend 10-3, or we can I like 15-2. But this is the standard setting. Let's look at the standard setting. So this is the standard setting. On a standard setting, what I have seen is that whenever it flips, right, like here, it became from bullish to bearish. And even if you would have taken a trade on the next day, which was 17,156, and you would have shorted, the low formed here was 16,747. So I have observed that 300 points move, 300 to 400 points move you get typically. If you look here, on 24th October, the super trend turned from bearish to bullish. So assume that this is when the super trend flipped. And the next day, 25th October, you entered into a long trade, even though 25th October candle was a bearish candle. So you entered at the open 17,808, you bought it, okay, because this is the bullish green. And you see how much it went. So definitely 300 point it gives. Now, as per this standard super trend, it is still bullish. It is still not bearish. It will become bearish below 18,343. So if tomorrow we see the candle closing below 18,343, then that would be a confirmation that super trend has turned bearish. And most likely it is going to give you a 300 to 400 point minimum move in the downward move. Downward direction. That is true for most of the time. Again, whatever we say through all these indicators, etc., nothing works 100%. There is no holy grail. But I would say 80% of the time, 8 out of 10 or 7 out of 10 times, this 300 point move on a daily super trend flip, you can catch. And the one setting which I use, which is 15-2, because I like this is a little faster. This works a little better. And as per the 15-2, we are already bearish on a daily super trend. I prefer 15-2. The standard literature says 10-3. I prefer 15-2. So if I go by 15-2, then I'm bearish. Then why should I take a bullish trade right now? And I expect this can give us 250, 300 point down right now. Okay. Does that answer your question? So I would say one can take a bearish trade. But again, that would be taking a directional bet on the market. If I want to be non-directional, then better create a strangle and adjust it.
Okay. So here, do we look at 30 delta or we just do ATM?
No. Don't ATM. See, I wanted to say that. So good that you're asking. So ideally, as you are starting, you shouldn't even do 30 delta. You should do 20 delta. Okay. Go far. As an option seller, we want to go far. As an option buyer, we want to be closer. Right? That's the thing. See, option buyer is very opportunistic. It's like a burglar. Burglar enters a house, finds suddenly jewelry. Then he has to just take the jewelry and run away. He can't be saying, now I will take television also and fridge also. By then, police will come or someone else will come. So you will get caught. So as an option buyer, you need to be very quick. You get your profit, you run away. As an option seller, you need to be more patient, and that is why you need to look at OTM. So if today, tomorrow you look at it, you don't want to get into very close to the fire, then look at 20 delta. Okay. With that, since Raghavendra is there, and there is one strategy I wanted to talk, which is an intraday strategy. So whatever I had shown last time, that was a weekly positional option strategy through strangle. Today, I will talk a very simple strategy. Now, this strategy, first time I heard was from a trader called Subhashish Pani. Of course, there are other people who have made the videos. And I really like it. Not that I every day follow it, but in my view, it's a good strategy. It's a simple intraday strategy. And I'll tell you the rules on that. This strategy is called 5 EMA. So just note it down. It's called 5 EMA. EMA is nothing but exponential moving average. Moving average, we all know. Exponential moving average is more recent than the simple moving average because it gives higher weightage to the recent price action. You can read more on how EMA, etc., is calculated if you're interested. You can Google it, EMA, and you will get all the details. So now let me just change it to 5 EMA. You have the EMA setting in Zerodha also. So if you want, you just, so this is 5 EMA. Just give me 1 second. And this is an intraday setup that I'm talking about, which means
just wanted to close on that one thing you told. You told about super 10 and day 15-2, but earlier you had told 7-2 is the primary setup. That is for 5 minutes, 1 hour.
7-2 when we are looking at the option chart.
Okay. This is
the
primarily for
chart.
the future. Okay, got it. Thank you.
But play around with that. 7-2 is also, you can try out 7-2, 10-3, 7-3, 15-2. I use 2 as an ATR thing. That is the main thing that impacts more. So 7 is the time frame, 15 is the time frame. 2 and 3 is what makes a bigger difference because the gap becomes bigger. Okay, so that is just to conclude super trends. Coming back to the EMA strategy. So giving some credit to this guy, Subhashish Pani, because he may have also learned from somewhere, I don't know. Purely intraday strategy, and you look at a 5-minute chart. Okay, you can run it on Nifty, Bank Nifty. I have not tried it on the stocks. It may work on the stocks. So this is even the people who are not so much into option, you can follow this. Even if you are doing intraday futures buying or selling or a normal stock, it should work on the stock, but liquid stock, as we say. Don't get into small cap or the mid cap. But things like HDFC Bank, ICICI Bank, I have not done much on them, but that should work. So you can, after listening to me here, try and see on the chart. Okay. Coming back, we change the time frame to 5 minutes. We set up something called 5 exponential moving average. So this blue line, what you're seeing is the 5 exponential moving average. Okay. Now let me increase the candle size a bit. So what are you observing? I mean, as you're observing, 5 is a very short-term moving average. Correct? Since it is a very short-term moving average, most of the time, this moving average runs with the price. Most of the time you see this, right? This is running with the price. Correct? Yes? Are you observing that? Most of the time, the candles are touching it. Okay. Now, the first thing which I'm talking about is when you short the market or you're looking for selling opportunity, which means either you will sell a future or a stock in the cash, or you will buy a put, or you will sell a call. Basically, you're saying now the market is going down. So first, I'm talking about how do you identify that the market will be going down and take a short trade. And as I mentioned, short trade could be shorting in the future, selling a call, or buying a put. All the 3 are short ways to short the market. I hope all of you are clear now by now. Selling a call means you expect market to go down. Buying a put means you expect market to go down, or you just sell a future. Either of the 3 things should work in this particular strategy. So first of all, we are on 5 minute, and this line is the 5 EMA line. Now, what is the rule? The rule is that we look for a candle which is above this 5 EMA line completely, which means even the low of that particular candle should not be touching the 5 EMA line. Please listen very carefully. As you can see, most of the time, the candles are very close to this 5 EMA line because this is a short-term moving average. And this is a 5 minutes. So the price is moving along with it. We want to identify a candle. I'll have to mute someone. Just give me 1 second. Just give me 1 second. Yes. Sorry. So we are looking for a candle which has not touched this 5 EMA line at all. And right now we are looking for an opportunity to short the market. So we are looking for a candle which closes above this 5-minute EMA completely. And this is a reversal strategy, which means that first we spot a candle which closed above 5 EMA, and then we will apply certain condition and take a short trade. So this candle, that, are you able to see this where my cursor is right now? All of you are able to see? You can
yeah.
So clearly you see this particular candle here where my cursor is has not touched 5 EMA.
This
Right.
includes the wick as well.
Yes, the complete body and the wick, everything. The entire candle, including the wick, should not be touching 5 EMA line. So this candle has not touched. Clearly you can see. So this becomes our alert candle. Any candle which is not touching the 5 EMA line is an alert candle. So we become alert. We don't take a trade there. When do we take trade? As soon as another candle breaks the low of that particular alert candle, we get into the trade. So as you can see, the next candle itself is breaking the low. So this candle low is 18,586. And the candle here, the next candle is breaking 18,586 low, because this low is 581. Even during the formation of the candle, you can take the trade, or you can wait for it. I mean, or you can do half quantity as soon as this low is broken, and half quantity as soon as this candle is closed. So as soon as this is done, the low of the alert candle is broken, you short the market. And as I mentioned, you short it like, again, if you're buying a put, you buy an ATM put. If you're selling a call, at least be 100, 200 point away and sell a call, or you can simply sell a future. Only challenge is when you're trading in the future, the cost is higher. It takes 3 points just to break even. Whereas in the options, depending on your quantity, if you're trading with the, say, even 1000 quantity, which is like 20 lots or 10 lots, then your break even can be just 10 paisa, 15 paisa. If you're trading with 1800 quantity, then your break even is just 5 paisa. So option moving 5 paisa, more than 5 paisa, you'll make some profit. But futures, you need more than 3-point move because of all the taxes, etc., which government takes. That's the only difference. Okay. Having said that, let's come back to the setup. As soon as the low is broken, you get into the trade. Now here, it is very important that you put a stop loss, because this strategy will work. Again, no strategy works all the time. So you need to have a stop loss. Mandatory here, stop loss. What is your stop loss? Stop loss is high of the alert candle. So 18,594 becomes a stop loss for us. So it is higher than where we have entered, because we are entering into a short trade. We are selling in the market. Okay. And what is my target? So let's say that where did we enter? The low is 18,586 and the stop loss is 18,594. So there is an 8-point difference. Let's say it is a 10-point difference. Okay. So we can lose how much? 10 points. And you have to keep on watching Nifty chart. Even if you're taking an option trade, in this particular case, you will watch Nifty chart. Your decision will be based on the Nifty chart, not based on the option chart. You can potentially look at that as a confirmation, etc. But for this strategy, it is the Nifty or the bank Nifty or whatever stock you're trading, that particular chart. You can always have your decision making. You can look at your option chart, but it may not give you the exact timing. So go by this. Everyone got the stop loss? Entry criteria?
No, I didn't get the point of here, Dheeraj. You're observing Nifty index, but you're doing trade on something else.
No, Nifty future I can trade, or Nifty options.
Nifty options. Okay.
Yeah. Something else means not like I can't observe.
Yeah, obviously. I was just, sure.
Yeah. So Nifty option. All I'm saying is you're not looking at the option chart. You're looking at the Nifty chart.
Understood.
You mentioned stop loss as the top of the alert candle,
Correct.
18,593. So if I'm trading in options, what's the price that I will put as stop loss? Whatever was at that
Whatever,
point.
let's say if it is ATM, then say 5 point roughly.
Okay. Okay.
But you observe that. And if it is, let's say you sold a call option, which was a 30 delta, then 3 point.
Okay. Okay.
Okay. So you need to make some adjustment there, or you are there in front of the screen, you can potentially, but better to put it in the system. Okay. And your target is 1:3 typically, or at least 1:2.5, which means if my stop loss is 10 point, I will work with 30 point target. Okay. So, and I will not exit unless my stop loss is hit. So in this particular case, you can very well see that we would have hit the target. It's very obvious, right? Here, target is 3 times of my SL. Is that clear? So if my stop loss was 8 point, target is 24 points, or you want to be little conservative. As I said, you want to run away with your profit, lock it 2.5 times. Don't be less than 2.5 times, because this strategy will hit stop loss many times. So, okay. The other thing is not more than 3 trades in a day. So in a day, whenever this situation is getting created, you can trade it. So it's not that you have to do it only once in a day. You can re-enter. Again, if a similar situation arises, another candle goes there, you can re-enter. So re-entry is possible, but don't trade more than 3 days. Sorry, more than 3 times in a day. Okay, any questions?
There is one question. Yeah. So if we hit the target of 2.5 or 3, can you trail your stop loss to that point and leave that?
You can. If you're comfortable, do that. And that is where I said that if you're looking at you are looking at the option chart also, then you can apply something. So there is no hard and fast rule that you have to exit, but typically you should target that much as the profit. Okay.
Got it.
So let me look at a few other things to make the clear. Okay. So now you look at this particular candle. Okay. Now, one thing I would say that typically after 2:30, don't do that, because you will have less time. Now this is coming at 2:55, but even if you would have done it just for the sake of illustration, but don't do it after 2:30 to 2:30. Don't do it, because you have very little time for market closer. But here, if we do it, you see this is our alert candle. Okay. And this candle low was 18,661. This low was 18,660.95, almost just there, and it went up. So you may have taken some, if you would have immediately taken the trade at the break of 18,661.35, then your stop loss would have hit. But if, as I'm saying, if you would have waited for the close here, where the close is below the low. So that is what I'm saying. Half quantity you can enter immediately at the close of the low, even during the running candle. Remaining half you enter after the close of the confirmation candle. So let's call this alert candle. Let's call the next candle as a confirmation candle. Wait for the closer of the confirmation candle and enter full quantity only with the confirmation candle closes below the low of the alert candle. Is that clear? Okay. Same rule apply. Now let's look at some other situation. Okay. Let's look here. 11:25 on 14 December. This low was 18,682. 18,682. Now we see that the next candle didn't meet the confirmation criteria. This didn't confirm. So we will not do anything. We still have this as an alert candle. No action here. Here, as you can see, maybe you entered with the half quantity. Okay. But this did not close. So here we have to wait for a closer which is coming below, right? And if we are not getting a close, then, maybe your alert candle will shift. Okay. So let's look at some other scenario. So you look at this particular candle. This is beginning 9:15 candle, right? 9:15 candle. The market didn't. So this is closing above. Okay, this is a good example. Let me explain this. So this first candle at 9:15 became the alert candle. Now, what do we see in the second candle? It obviously didn't go below the low. Okay. And this candle is also not touching the 5 EMA, right? This is when the gap up has happened. So now your alert candle moves from this candle to this candle. Your new candle becomes the alert candle. Okay, so all the rules you will now start considering the new one as the alert candle. Now the third candle again does not touch 5 EMA. Now your alert candle is this third candle. Discard the first two candles. Please listen to it carefully. You identified one alert candle. You moved the alert candle. You move the alert candle. So you're moving as a new alert candle. An alert candle is the candle which is meeting the criteria of no part of that candle touching the 5 EMA line. As long as that is happening, you are considering that as an alert candle. So now this is alert candle, alert candle, alert candle, alert candle. So this candle, 9:45 candle, all these there was no reversal, right? None of these candles were going below the low of the alert candle. So this is the candle which is now new alert candle. Next candle breaks and closes below the low of this alert candle. As soon as this closes, you take the trade. Same logic. This high would be the SL here. So this SL will be here. Okay. This is the SL, and you measure what is the SL, and you play for 2.5 to 3x the target. Okay. Now, if the SL is above 10 points, let's say the alert candle is a very long candle. Okay, maybe if this would have been the alert candle. In that case, you are taking the trade somewhere here, right? So your SL will be very high. Note this point again. If your SL is becoming, say, 20 point, 25 point, because the alert candle was a long candle, then don't keep the alert at the highest point of that candle. Keep the alert as somewhere in between, the middle point of that alert candle.
The stop loss.
The stop loss. So suppose this candle would have been the alert candle, this big green candle, then this would have been your SM. Okay, rather than keeping the SL here. Okay, and the reason is, in that case, your SL becomes too big, and so your loss will be much higher. You want to manage your loss. That is the only logic.
On what basis you will determine it is at the half? Means the length of the candle?
Length of the candle, half of that.
No, so what length of candle?
This candle, high and low.
So is there a specific length that has to be there for which?
No, there is no. You just say that, my SL is more than 10, 12 points. Then let me bring
it should not be
SL.
more than 10 points. If it is more than 10 points, then define the stop loss at half of the candle length.
Yeah, something like that.
Okay.
Okay.
Neeraj, are there specific where you should not be applying this strategy, like event days or expiry days, or can it be applied on any day?
No, any day except 2:30. After 2:30, don't do it.
Okay.
And to be on the safer side, enter on the close of the confirmation candle, to be on a safer side, if you don't want more stop loss. You may lose a few points, but that's okay. Wait for the closer, ideally, but you can do half and half. Yeah, sorry, there was a question.
Can you just show the actual virtual trade? I mean, that makes it more clear for this case, for this scenario. I mean, can you actually simulate the trade?
Yeah, so this is the simulator here.
Okay.
So what you do is this is my alert candle. Okay. So this is alert candle, which was low was 18,682.4, right? So let's look at that. So this was my alert, because all these alerts started moving, right? They started shifting. So let me just mark it in a different color. Okay, sorry. So let's say I'm marking this as an alert. Okay. So this candle low was alert candle. Now the next candle closed below the low of the alert candle. This candle, right? 950 candle. So I will not be able to enter the trade here. I will enter the trade at 955. So 955, what was open? 18,676. So we enter at 18,676. 1 or 2 point here and there will be there. You may not be able to exactly catch it. Okay. 18,676. So this line is when you enter. Let me change that color to, say, your green color. So this green is when you enter the trade. As soon as you entered the trade here, what is your SL? Your SL, this is 676 is when you entered. And if you take the high of this candle, the high was 694, right? So the 694 and this one was 676 is like a 20 point. Don't go that far on the SL. Keep your SL somewhere here. Okay. So this SL, sorry, am I making a mistake? Just 1 second. This candle I am entering. Yeah. So I kept my SL here, which is 18,688. This line, let me make it red. Okay. So the red line is my SL. Let me just make it. Red line is my SL. This was the low of the alert. This is where I've entered. Okay. So now if I look at my SL to my entry is at 676. My SL is at 688. So 12 points. So let me play for 30 point gain. Okay. So here it is 676 was the entry. So I'm looking for 646 as the target. Okay. So I have to see, in this case, probably that much 30 points we didn't get. So, in this case, most likely after waiting so long, if you're still in profit, you can somewhere exit, or you will have to give up on your stop loss, basically. So once it hits here, you will exit the trade because you didn't meet your 30-point target in this particular case. But there was a reversal, as you can see, from 18,676, it did go to 18,654, which was a 22 point move, but it did not meet our 1:3 target. That is why keeping the 10 point is a more reasonable thing, but you can't force fit everything. So in this case, most likely you will end up having a loss. Does that make, at least the rule is making it clear? You will have to play around. If you want to be safer, you can even do a 1:2 target. But only challenge is 1:2 that your success rate need to be higher. Then it will make sense. Okay.
In Bank Nifty, we probably will need more points, right? Because 10 points is way too less.
Correct. So you do 20, you can do 30 points on Bank Nifty and play for 60, 70 point move. Let's look at Bank Nifty. Right. So as you can see here, this was the alert candle here, right? After moving everything, this candle became the alert candle on Bank Nifty. So here, this is my entry point. Okay. Below that was the entry point. And this candle high was the SL. Okay. So you can see my SL was at 44,094.
32 points.
32 point. And if you see where we hit after that, we reached up to this point. So you reached 43,987,
Mhm.
right? So you got 62 plus 13, 75 point,
Hmm.
right? So
Yeah.
if you would have kept a 1:2, you would have booked your profit, right? It went down, as you can clearly see that it went down here. Okay. So, you will have to do some paper trade and see what is your comfort. Like it's 1:2, 2.5, 1:3. But 1:3 happens many times in this scenario because it's the reversal thing. Once the candle low breaks, you get 1:3. So maybe you do some trailing, or your SL was here, you can bring down your SL. So some of those things you will have to apply as you get more proficiency. But this is the logic. So the entry is 5-minute chart, 5 EMA. A candle is not touching the 5 EMA line. The low of that candle breaks, you are in trade. And ideally, that should be the closer of the confirmation candle. But as we can see, sometimes it will close too far. So you can do half quantity at the break of the low, half quantity at the closer. Okay.
I'm not able to understand how this. Sorry, go ahead.
Sorry, go ahead.
Yeah, how this fifth candle, how that candle is the alert? What is the logic? I'm still.
So what we are doing is that, let's say this candle didn't touch, right? So this candle was the first alert candle. So this candle was the first alert candle. Then you can see this candle also is the similar situation. So the alert shifts now. So I've shifted this alert.
Similar situation means it does not close below the first candle.
No part of this candle is touching the 5 EMA line.
Okay.
And it is not breaking it also, correct? So it is a new alert candle. See, what was the low of this candle? This was the low, right?
Right.
Didn't break, na? So now you have a new alert candle.
Okay.
Now this candle also didn't break, but this candle is not an alert candle because it is touching 5 EMA.
Okay.
Now this candle, if you look at it, this candle is an alert candle.
Right.
Correct? So now you shift. So you need to keep on shifting the alert candle. Now the next candle is also an alert candle because it is not breaking it. Okay. So this is the alert candle. Now where you see this became the alert candle.
Right. Okay.
So we wait for this low to be broken for making our entry.
That is the next candle where
the next candle. So here we will enter as soon as the low broke.
Okay.
After we enter, we had the whatever SL, and this this candle is there. No? So this was the SL there. Correct? This is the SL. Your SL is not hit, and this is the target you got.
Okay. Good.
Got it?
Yes.
How often do you see these patterns?
It does come 2-3 times in a day. It may come. Sometimes it happens at the opening.
Okay.
So if it opens, right, and then it reverses, then that is a good thing. If you remember, I was saying, right, many times the gap up and gap down will reverse. Okay. So many times this situation will happen that particular time. Okay. Because it will gap up. It will not touch the 5 EMA, that particular candle. And then market reverses. The low of that opening candle is broken. When the low of that opening candle is broken, that is when you can get into the trade. Okay. So this is for selling, right? Now,
Dheeraj,
yes.
Yeah, and maybe you'll clarify here. So for selling, this alert candle needs to be above EMA, correct?
Correct.
Means the alert candle is always above the EMA, not below the EMA.
No. Because you are playing the reversal here, Balaji.
Correct. Got it. Yeah. This is the decision itself to short, or once we make the decision, this tells when to short. And this whole scenario of alert and the next candle.
No, this is the intraday trading technique.
Okay.
Only intraday. You have to play this. This is not a positional. So alert candle is just an alert. So you have become alert. That is why it is alert. The entry will be on breaking of the low of the alert candle.
Okay. Got it.
Okay.
Yeah. Yeah.
So when the low is broken, and ideally the confirmation candle is closing after breaking the close is below the low of the alert candle.
Yeah.
Then you go short. That's it. And you have a 1 to 2.5 or 3, 1:3 as your SL. SL is high of the alert candle unless that candle is too big. If it is big, then half of that alert candle becomes. So like in this case, your SL, suppose this would have been alert. I will not keep the SL here. I'll keep the SL somewhere here.
Yeah. So what is the logic on this one?
Reversal.
Okay.
Reversal. You are playing. See, this is a very strong candle, right? See, most of the time, the candle is moving with 5 AMA because it's a very short-term EMA. Now there is a strong candle which is above it. And that candle low is broken. So the force which is in the opposite direction has to be strong to break that, isn't it?
Okay.
So the force is strong, then it will have the momentum. It will go some way before stopping.
Yeah, got it. We're playing on the momentum.
You're playing on the momentum on the opposite side.
Yeah, got it.
See, there is a strong guy and you beat that strong guy. Then, like whatever you're running, there's a faster runner who is ahead of the pack. And suddenly someone comes from behind and crosses that guy. He is not going to stop just after crossing suddenly. He will go some distance. So that is the logic. That is the psychology or the logic behind it.
So low including the wick, right? For the alert candle.
Sorry.
So low of the alert candle, it includes the wick also, right?
Obviously, this is open, high, low. Look at this, right? You see that even in Zerodha.
Right.
Any candle, you see this, this open, high, low, close. These are the 4 things which are available for any candle. So look at the low, L. Okay. So I need to quickly, because there is 1 or 2 more things. So this is the selling setup, right? Now, what is the buying setup? Buying setup is you change this 5-minute to 15-minute. Okay. And now you will look for a candle which is closing below this 5 AM without any part of the candle touching this 5 AM. And why 15-minute? Because typically the move which happens on the downside is faster than the move that happens on the upside. So now we are looking for a buying opportunity, which means either we will buy a future or we'll buy a call or we will sell a put. Okay. So here we will look for a candle which is closing below the 5 EMA and no part of that is touching that. Okay. So where do I see that candle? No part has to touch. Okay. I mean, these are the candles. These are alert, but they were not broken. Okay. Let's look at this one. Okay. So this is the candle. As you can see, this candle is an alert candle. Okay. But this was at 1:30. Yeah, that's okay. So this candle is an alert candle. Next candle is also an alert candle, because now in this case, what we need to do is high of the alert candle has to be broken. Correct? Because we are buying something. So it is opposite of selling. Selling, we wanted the low of that alert candle to be broken. Now, and the alert candle to be closing above the 5 EMA. Now it is just the reverse. Everything is the reverse condition. The candle should be completely closing below the 5 EMA and the confirmation candle will break the high of the alert candle as opposed to breaking the low of the alert candle in a selling scenario. It's clear to everyone? Yes, no? Yeah. And we change the time frame from 5-minute to 15-minute. Okay. So this is an alert candle. Next candle becomes an alert candle. So now the alert moves. This was the first alert. The next candle itself is an alert candle. I move it here. This candle is now crossing my alert. So my SL, same logic. This is my SL. And apply the same theory, right? I mean, this is too big an SL because it's a large wick. This is the entry point. See, these are the candle where if you wait for the closer, you will lose most of the move. Okay. And so if you look at this point, this is 206, this is 104. It's too big, too many points for the SL. So you are not going to take this big an SL. You will bring the SL to somewhere in the 30 point kind of range, 30, 35, 40 points. Okay. So this pretty much, you can even take the low of this candle as the stop loss. So this is where you need to make some adjustment. You can't just blindly say, I will take this 100 point SL because that is too big an SL. You will lose a lot of money if it reverses. So if you're taking 30 point SL, you play for 100 point. And as you can see, you entered here. This is what you got, right? More than whatever you wanted, right? Here it was 206. We got a 150, 160 point move on the opposite side without touching the SL. Okay. So try this out. Intraday purely, you're not going to carry the thing overnight. Don't trade after 2:30 and not more than 3 trades. You make 3 loss, just shut down your computer. Don't do anything that day. Okay, go have a coffee or whatever it is, right?
And stop loss we can put only after the original one, like after the trade is done, then you can put the stop loss. You can't put it together, right?
Yeah, I mean, you enter the trade and then you do the SL. I think you can do the GTT order, right, with the SL. I don't normally do it. You should be able to do a GTT order at the confirmation, right? I mean, you can, as soon as the alert candle is there, you probably can put an order, limit and SL order.
GTT is also priced, right? That lead up in ETT.
Sorry?
GTT also you need to pay for it per trade, right? So that will eat into your profit.
I didn't get it.
GTT is not free. You need to pay, I think, in Zerodha. So you probably lose that 20-30 rupees again.
Oh, okay. Yeah, that is stock. In case of option, anyway, you paid that 20 rupees, right? For all the trades. There is nothing free.
No, true. I thought GTT is on top of what you pay for the trade.
Is it?
That's what I recall.
Okay. Yeah, I have not checked. Maybe another 20 rupees. But here you're playing for larger, right? And you can do 500 quantity, 1,000 quantity, whatever you are comfortable with. Yeah. So this is a pure intraday play. Now, if everyone is clear, then I will move to something different. This is called 5 EMA strategy. And, you can watch my video, but you can also look at Subhashish Pani 5 EMA strategy. He has done a lot of seminar, a lot of things, and, you can check. I mean, I have learned from that. So it's not something which I observed. I heard him and I thought it's a good strategy. I do it many times.
There is just a quick one here. For double confirmation of direction, do you think it would help if we put a 8 EMA on top of this and see if there's a crossover on the downside, then it's a down?
You can do this one simple. You can do many things.
Okay.
But this is a reversal thing, right? So this strategy is only this much.
Okay.
And I don't suggest that you complicate this one. If you're trading on this, see, the strategy should be simple. In my view, I mean, of course, you can do some confirmation. You can have another trade. That's where we have multiple things and we start trading, right? But ideally, if you have one setup and you perfect that setup, you will become very good at that setup and also develop confidence. See, you take 2 trades and both of them hit SL, you just give up. You say, no, this was all bakwas. You have to do, 10, 20, 30, 40 trades to see how things are moving. And then you will probably look at few things, optimize, and whatever setup you have, you then continue with that setup. Otherwise, many people get into the market and they get out, right? See, whatever I am telling you, the entire thing, there's nothing new. I have not done any original research and sharing with you guys, right? And probably very few have done that, right? So most of the material that you have today is there. So why everyone is not making profit in the market? That's all on the individual psychology. So more than the skill or the knowledge, it is the psychology of the trader that comes into play. I can guarantee you the same thing, 15 people are there in the call today. All 15 will do different things after hearing exactly the same thing. Right? So, that is a big thing which we should not discount, psychology of the trader, or who is the guy who is making the decision. Anyway, unless you make algo and it's the same algo running, then that element will be gone, right? But then human being will switch off that algo. No? The switch is also there, right? So switch on and off is a decision is taken by a human being. The algo also can be switched off. Anyway, let me move to something different. Okay. Now what I am going to talk about is a intraday strangle selling strategy. This is an intraday. I mean, let's say you just want to do intraday. You say a lot of changes happening, a lot of news coming. I mean, yesterday market looked so beautifully poised to go up. Correct. In the night, everyone is expecting 50 basis point cut. There was a 50 basis point cut, but no one knew what Mr. Powell is going to speak. And then you saw the reaction. And US market didn't react much yesterday, at least. Right now, where it is. Right now, right now it is 400 point down. So today it seems to be reacting, Dow Jones. But our markets reacted. Okay. So all I'm trying to say is that in case you say that, look, I don't want to carry the overnight risk. All I want to do is I come during the day, I spend 4 or 5 hours, I want to make a few thousand rupees. That is my objective. Then what should you do? So I'm giving you one intraday strangle selling strategy. Okay. All of you are getting what I'm going to show. Intraday strangle selling. So that day I showed you a positional thing where on Friday you take a position for the next expiry. This also you will do on the next expiry, but you will focus only on intraday, and at around 315, 320, you will cut down your position. Okay. So we can take any day. I'll have to look at something which has Obstra. Just give me 1 second. Let me just go to some random date. Say 4th November. Okay. So we are on 4th November. Let me switch off this moving average so that it is clear. Okay. So what I will do is I'll go back to Obstra to show you this strategy. We just randomly selected something which was on 4th of November. So let's go to that date. So we need to select the expiry, which is immediate expiry after 4th November, which was the 10th November. So we selected 10th November expiry. We will make this position say around 9:30 or whatever. So we wait for 15 minutes. And now let's look at the chart. So here we will have to look at both the Nifty chart and we will have to look at all this option chain. So 4th November at 9:30. I have not talked about the concept of support and resistance, but let me change this to 5-minute chart. Okay. So as you can see, 4th November market gapped up. Okay. This was a candle and then it reversed. And now we are trying to do an intraday at 9:30. We are trying to create our position. Okay. So we have reached 9:30. The day high is here. So 18,106. We need to be aware of that, but let me not complicate it. 9:30, where is Nifty? 9:30, the Nifty was at 18,084 was the open, high was 1893, etc. So it is closer to. So what is the ATM strike here for Nifty? What is the ATM strike? 18,100. Are you guys there? Hello?
Yes.
Okay. So 18,100 is the ATM strike, correct? So what we will do is we will look at the option chain at 18,100. This is kind of option chain. It's just that it is backdated. Okay. So 18,100 option chain. Now, as I had explained before, the ATM, if you're doing both selling call and put, that is called the straddle. So in a way, straddle gives you a range which the market makers are expecting market to be in that range, roughly. And that is why someone is willing to sell that straddle. Straddle is the same strike, both put and call, and strangle is the opposite strike. So ATM straddle, at the money straddle, if you add up the premium, then roughly market is expecting to be in that range. Now 18,100 is our ATM strike. What is the premium? The put premium. This right side is the put, left side is the call. Put premium is 127.5. Call premium is 122.45. So if you just add it up, it is 250 points, roughly. How many points? 250, correct? So that day, you're expecting the market to be in 250 point range. Now, this is where a little bit of judgment comes. So you want to be even safer. You are selling. So what you should do is add 50 to 100 point to it. Or if that day is very volatile, then even 150 point. So straddle is saying that this is 250 point. You add, say, another 50 point to it, 300 points. And what we will do is 18,100 is the ATM. We will sell a 17,800 put, which is 300 point down. And we will sell an 18,400 call, which is 300 point up. Okay. Now, this is a little bit discretionary, what I am talking here. It is not as black and white as what I had talked in the previous session. But this is roughly what it is. So you look at 300, or if you're a very safe trader, you look at a 400 point away from the ATM. Let's look at a 300 point away. So 18,100. Let's go to 17,800. Put is trading at 34.6. Right. So we sell that put. Okay. And 18,400 call. 18,400 call. Now, as you can see, that 17,800 put was at 34 rupees, but 18,400 call is at 22 rupees. Okay. So we wanted to sell this, but we see a big difference in the premium, 34 rupees versus 22 rupees. So we don't want to start with that kind of difference. We want to be closer to the premium. And this phenomena is called the skew. In this case, the put premium, typically the put premium is higher than the call premium, but not by this much. Maybe this day they were expecting something. Okay. So 17,800 was 34 rupees. 18,400 call was 22, but we don't want to go this far. So we go to 31.95 because we want to be closer to the premium. Okay. So this is what we create. And a quantity can be anything. I have just started with one lot. Okay. So what are the steps we followed? We looked at where is Nifty at 9:30. We identified the ATM strike. We went to the option chain. We looked at what is the combined premium or what is the straddle premium of that particular ATM strike. We figured out it is 250 points. Then we add some safety to it, say 50 to 100 points. So we decided to do 300 points. And now we are selling, creating a strangle, short strangle, selling a put, which is 300 point down, and selling a call, which is 300 point up from the strike. We also want to look at that the premium should not be too much different. In this case, we figured out on that day, on 4th of November, the premium was quite a bit different. So we wanted to be closer to the premium in both the cases. So instead of going 300 point away, we went 250 point away for the call. So far, so good. All of you are able to follow?
Yes.
So let's look at the PNL. Let's look at, where we are, say, after 15 minutes. So we made some profit. After another 15 minutes, we are in a loss. Now we need to keep on watching here. Okay. Now here, as you can see that, now same, we can look at 1:2 kind of ratio. So it didn't reach. Now it is coming closer. So we are okay. We don't do anything. That 1:2 logic, we will apply here also. Okay. Okay. Here we see we are at 75 rupees loss, profit. Okay, which is like 1.5 points, not much. But now we see the imbalance in the premium, right? This is 21 rupees. This is 43. Now here, what we are going to do, we are not going to play with fire. That strategy, we could have, the earlier strategy that I talked, we would have booked this call and we would have brought the call closer to 43 rupees. That was the strategy which we discussed. Here we are doing something different. Here we want to play a little safe. So we want to be away from the spot. So now it is 10:45. Let's look at where is Nifty at 10:45. So as you can see, the market was falling. That's why the put was going up. Okay. So this is 10:45 candle. This is 10:45 candle. Okay. Now, if you look at 10:45, Nifty is opened at 18,022. So we started at around 18,090 or whatever was that number. So Nifty has fallen today, that day, 4th of November, by 1890 points. And that's why we see the balance. But even after the fall, as you can see, we are still in a minor profit. Okay. But instead of bringing this call closer, okay, we are going to do something different here. And what is that different? We will close the put position. Okay. This 43. So this is 17,800. Okay. So let's edit it. Let's book it. Book loss. Okay. 43.6. I think it is 43. Just one second. 43.65. Okay, so we are booking 9 rupees approximately loss. Okay. We book the loss. Okay. After we book the loss, we want to see the open option chain, and we want to see something which is closer to that 21 rupees put strike. We are doing something different here. Okay. We are going away instead of coming very close. Sorry, where did I miss it? Yeah. So as we can see that 17,650 is trading at 1995. Okay. So we will sell the put option. So now we started at 17,800. Market fell. When market fell, we kind of moved away, keeping in line with the market fall. Are you able to follow it? See, in the earlier case, which I was telling you in the last session, we would have kept 17,800. and we would have moved 350 to maybe 250, 200. So both would have come closer. Now we are trying to say, okay, I booked 9 rupees loss. That's okay. But I want to still be safe. I don't want to get into, very close to the strike. So let's see what happens. Okay, now we are looking at this 23.17. Okay, 24.90. Right. Now you can clearly see that our profit has become 137 rupees. Okay, so 137 rupees on profit translates to about 3-point gain on Nifty. In fact, if you play with the larger quantity, 3 and 4-point gain give you. This is already 0.13% of your whatever margin you have applied. Right, for a day it is good enough, but we can see what happens. Okay, so we are okay. 145 rupees, right? 200 rupees profit, 185 rupees profit, 185. Right, now we are at 315. What happened here? Okay, so suddenly this shifted. Right, at 3 to 315 there would have been a major spike here, I guess.
Dheeraj, but we went past that 1:2 ratio, 2 candles before, right? After the first adjustment.
So here we are not looking at that. That was a 5 EMS strategy, right? That now I'm moving to a different strategy. Here,
No,
what I'm saying is, sorry.
On the current price, if you see, it's 37 and 10.
Oh, here.
Yeah.
Correct. So we need to look at, okay, you meant that. Yeah, so you probably will make that adjustment later. Earlier. Okay. So here probably we would have made an adjustment and not run into this, or it is already 235. You have made 0.25% profit. You take your profit and relax. See, the key thing here is, or you can do the adjustment, but as you can see, the time is 2:30, 2:35. Okay. And you are in profit. So somewhere you will have to, so this is where in this particular strategy, there is some discretion, but in general, this is a safer strategy than the earlier one. Earlier one comes very close. So you need a more number of adjustment, etc. In this one, very clearly, you made even on a day when there was a move, and even though you booked 9-point loss upfront, you ended up making 5 or 6 points profit. 5-point profit is a decent profit. But if you wanted to do here, right, here we can we can do something and bring it closer to this leg, closer to this 350. That is a bit of discretion, but that is the strategy. It is not as rule driven as the previous strategy that I talked about. So from that extent, you may like that one better. It has some amount of discretion built in. You need to figure out. I'm just giving you, because every strategy is not like totally system driven. So here, once you reach here, the options in front of the trader is you just book your profit, right? You are already into 5-6 point profit, which is like 0.25% you have made in a single day. Just book your profit is one option. Or you say, here I will see the market, what is happening at 235, right? So 230, 235 is what you're seeing. You can watch the market, you can keep it unless you see this candle, and on this candle, you can exit at 3 o'clock. Exactly. 305, whatever. So you need some discretion here. Right?
Dheeraj, I want to ask a question. Will this strategy work when the Nifty is making VM moves?
Yeah, you adjust, it will work. That is what I'm saying. You will have to move your positions there, depending on this thing. You will have to go further. So here you are not coming closer to the strike. You're booking a losing leg. And if required, sometimes you will even book the call and shift to a different thing. It will work.
Okay.
Dheeraj, what is the idea of this strategy? We are taking the premium difference between straddle and strangle. Means at the money premiums
That
and
is just
OT.
to identify, Balaji, the range.
Okay, but what is the idea here? Means how are we
Because
making
see,
money on
that
this?
is no, there's a market. Why? How do you think the straddle premium gets decided? Who decides that? And why? Think about it. I mean, there has to be a logic, right?
market
Why is
maker.
that straddle premium?
Straddle is definitely the range. Means
So this is
people
what
decided with
I'm just identifying the range by looking at that. What would be the range today? Different days it would be different, right? That straddle premium. See, instead of blindly saying that every day I will be 300 point away from the ATM, I am saying you look at the straddle range and then add another 100 point safety to it and create your strangle. So the straddle is only acting as a guideline for you to decide on the strike.
Okay. So we are making money of the decay.
You're making money on the decay. This is a pure decay strategy.
Okay, got it. Thank you.
This is pure decay strategy. And here you are not that uncomfortable where you have come very close. See, you remember your questions last time you were asking that you are just booking the near profit, but future, what will happen?
Yes.
Here,
yes,
what is
correct.
happening? You're not going closer. You're staying away and playing on the decay.
Correct. Got it. Yeah, exactly. This takes care of the risk.
That is also, I mean, it depends. See, that
Yeah,
is why
that is
I'm
from the
showing
premium
this
profit.
is that depending on the on your proficiency level or your mindset, you may find one which is more suited to your psyche.
Yeah.
Correct. Everyone, see, there are people who sell straddle and make money, and there are people who sell far OTM strangle and make money. Correct.
Yeah,
Okay.
got it.
Yeah. Great. We have 10 more minutes. Is everyone clear on this? Should I repeat? I mean, I don't think I need to repeat it. You can watch the video again. So I will just quickly tell you a simple, another strangle. It is called the calendar. Okay. So calendar is a strategy which works very well. Normal calendar spread. Calendar spread works very well in a low VIX kind of scenario or when the IV is low. So except today, for the past several days, we are at a 13 or below 13 IV. So anytime the IV is 10 to 13, the standard calendar spread works very well. Now, what is a calendar spread? Okay. So I'll just show you the same example. Okay. So what we do is this you can do both intraday and you can also keep it positional. Okay. Calendar is nothing but you are selling and buying same strike, and this is a standard calendar. There are variations to that calendar, but the standard calendar spread is you sell an option for the nearer expiry. Okay, so for example, 4th November. So you will sell 10th November expiry, and you will buy an option of the same strike of 17th November expiry. Calendar spread is whenever you have strikes with two different expiry day. That is called a calendar. Now, typically, you should not do calendar where I am selling a weekly, nearest weekly, and 3 weeks later I'm selling. You can do. I mean, that's a different kind of thing. That is not the standard one. The standard thing which is followed in Nifty and Bank Nifty is nearest weekly expiry I sell, and the next weekly expiry I buy. And now, can you tell me what is the advantage of doing that? Why would you do that? Why would you sell the nearer one but buy the farther one?
Decay will be faster for the nearer
Safety.
Both safety as well as decay will be faster on the nearer one, and you are selling the nearer one, so that will decay. Farther one will not decay so much. There will be a value left in that. Okay. And you are getting the safety. So let's look at the same thing. What we will do is, again, we will use the straddle to define that. So we had already checked 4th November. So we look at 300 points away. What we will do is 17,800. We'll sell the put. And we will also sell a call of 18,250 as we had done. Sorry, 18,350. So this is one position which we have created. This is just a simple strangle. Now we need to create that as a calendar. So what we do is we change the expiry to 17th November. We get the option chain, and same 17,800, we will buy the put, and 18,350, we will buy the call. 17,800, we will buy. And 18,350 also we will buy. So now this is how you see the graph, right? This is the calendar. Now this is a net debit strategy, which means that we have paid money from our pocket because we received 35 rupees, 33 rupees, but we have paid 85 and 87. Okay. And that is where we wanted the volatility to be low, so that if the volatility increases, we will benefit from this strategy. Okay. So this Vega is a positive Vega. What is the meaning of this positive Vega? 1,040 rupees, which is 1 point increase in the IV will increase the value by 1040. This is called the long Vega strategy, which means you will benefit from the volatility going up. And that is why you want to create this when the volatility is low, not when the volatility is high. So for example, let's say February is our budget. January beginning, slowly the volatility will start increasing as the budget comes closer. So when the volatility is still not that high, you will create the strategy and wait. As the volatility goes up, you will make profit. So this is a standard calendar. Okay. Yeah, we can do essentially we can do the PNL and we can see what happens to it.
Any adjustments required?
We can do, no, this automatically, I mean, this is on its own, it's like, as you can see, right? You're just going, this doesn't require too much adjustment, you can, sorry, I think I went above that. Wednesday, you can exit basically. So don't wait for the 10th, 9th, you can exit. Right? Whatever is there. It's a low, low return strategy. Okay. In this case, the return is lower, but it is a safer strategy in general. This works if you have entered in a low volatility situation. This is a standard calendar. There are many variations of the calendar. Maybe in some of the other class, I'll talk about it. I mean, there is a diagonal calendar, etc., where instead of 17,800 buying 17,800, you buy 17,500. And this one, you buy 18,650. So that way, you don't give up so much premium, right? So if we just want to see that for a moment. That is called a diagonal calendar. So let's look at 17th November expiry. We will not buy 17,800. We will go 300 points away. We'll buy this. Is this correct? 17,500. No, I think we have changed the price now, so we need to move. 4th November. 17,500. So we pay 38 rupees. And 18,650. On 18,600, we can buy either of these. So now you can see the payoff chart. This is how it is looking. It's a kind of a diagonal. That's how this moves. And here you have, in fact, received. We paid 35.33, and sorry, we received 35.33. We received 38.16. Actually, this should have been different. This should be closer to that 33. I think we don't have to go this far. We can go to 18,500 or so. So don't go this far. Come closer, where the premium of the farther week is just 5 rupees or 10 rupees above the premium for this week. And you know that after the week ends, the premium for this week will become 0, but the premium for the next week will not. There is still value left. So you will still end up making some profit. Okay. Yeah. So that's pretty much all we had today. You can play around with some of these things, 5 EMA, this daily intraday strangle selling. Try a calendar, but try a calendar, standard calendar, only when there is low VIX kind of scenario. When the volatility is going up, don't do that. Yep. Any questions before we wrap up?
No, I think there are a lot of things today. Thanks a lot.
There is, yeah. So pretty much, as per the schedule, we wanted to do a live trading tomorrow. Are you guys game? I mean, you want to do it?
Yes.
We can do that, Dheeraj. I'm on leave today anyway, tomorrow anyway.
Hey, Dheeraj, I would love to be part of it, but I have a conflict tomorrow.
Okay.
Can the session be recorded also?
No, the live trading, I just wanted. So maybe we will set up some other time, maybe let's get some more proficiency. What I suggest is, this pretty much covers our futures and options, right? Then we will reconvene next month onwards, and we will talk more technical analysis, and I will also probably have 1 or 2 sessions on the fundamental analysis, so that there are many participants here who want to who want to focus on the stocks as opposed to options. So it will be beneficial for them also. We completed the future option. I think you have now got a hang of what is different kind of options, some of the intraday strategies, some of the positional strategies, option selling, option buying difference, Greeks, all those things. My suggestion is don't leave it and wait for the next set of meetings to start. Practice, like the way you said, Prasanna, you were doing paper trading. That's a good way to do. I also suggest that, risk small amount, right? You can always risk a few thousand rupees because that will give you a real sense of what you're doing. Do some trading, and then we will reconvene in January. Yeah.
Dheeraj, can we do a monthly expiry demonstration? Last Thursday of the month, January, live trading.
Okay. And expiry, the only thing is I will lose the 3-4 lakh rupees if I do that.
We'll see.
Unless you just want to see.
2 p.m. we'll see.
That is the only day I make some good money. You don't want to lose that. So expiry day, I would like to avoid. On a serious note, I would like to avoid expiry day trading. I would like to pick up any other day, not the expiry day, for the live session, because it will be distracting. I mean, I won't be able to focus the way I do normally, right?
Oh,
if I am trading live with so many people watching. So
people will get scared.
If you look at how I take positions on expiry, then yes, you may get inspired, whatever it is. So I hope these sessions were useful. I enjoyed delivering this. I also learned many things. during this process. I hope you probably benefited from it, and you will practice for the next 1 month before we reconvene and we start on the more technical analysis, which will build a solid foundation. And in that case, whether you're buying equity or F&O, it doesn't matter.
Thank you, Dheeraj.
Right? Okay. And if we don't meet, of course, we'll meet in the new year. So wishing everyone a very happy new year and nice holidays. Enjoy time with family and continue doing some trading. Yeah.
Okay.
Thank you so much.
Thank you, Dheeraj.
Bye.
Thank you so
Thanks.
much.
Bye. Bye.
Yeah, thanks, Dheeraj.
Bye.
Bye bye.